You've got it. That idea that keeps you up at night, the one you're sketching on napkins, the one that could honestly change everything. It's brilliant. But hold on. Before you even think about ordering business cards, there is a foundational decision that can literally make or break your entire venture. So let's get into what that is and why it's so darn important. Okay, so you are ready to launch. You've got the product, the service, the whole vision mapped out. But what is the very first legal move you have to make? It's a question every single founder has to answer. And believe me, the choice you make sets the stage for everything that comes next, from how you get taxed to how protected you are if things go sideways. And there it is. The big decision is choosing your business's legal structure. Now, I know, this sounds like boring paperwork, right? But it's not. Think of it as the blueprint for your company's entire financial and legal life. And to really see why it matters so much, let's follow the journey that pretty much every business takes. So when you first start a business, just by yourself, you don't actually have to do anything to form a legal entity. Nope, the law just gives you one by default. It is, without a doubt, the simplest way to start. But, as we're about to see, simple can also be really, really risky. This default setup is called a sole proprietorship. So if you just start selling a product or offering a service, hey, congratulations, you're officially a sole proprietor. The most important thing to get here is that legally, there is absolutely no separation between you and the business. You are the business, and the business is you. And this is where it gets kind of scary. This concept is called unlimited liability. Because you and the business are the exact same legal entity, if your business racks up debt or gets sued, creditors can come after not just your business bank account, but your personal stuff too. We're talking your car, your house, your savings account. It is all on the table. That massive risk is precisely why most business owners very quickly start looking for a way to build a firewall between their business life and their personal life. They need some kind of liability shield to protect what they've worked so hard for. And the solution to that risk is forming a business entity that offers limited liability. This is what creates that firewall we were just talking about. It basically establishes the business as its own separate legal person, so your personal assets are no longer on the hook for the company's debts. Your risk is now limited only to what you've actually invested in the business itself. And wow, does this quote nail it? The source material puts it perfectly. Creditors cannot touch your personal life. This is the single biggest reason founders decide to move beyond being a sole proprietorship. It's all about buying yourself some peace of mind. So if you want that protection, and you probably do, you've got a choice to make. The two most popular types of liability shields out there are the limited liability company, the LLC, and the corporation. So let's figure out how you pick the right one for you. Okay, this chart breaks it all down beautifully. You'll notice both the LLC and the C corporation give you that crucial limited liability shield. That's a given. The real differences, the things you need to think about, come down to taxes and formality. Generally, LLCs are simpler. They have what's called pass-through taxation and way less paperwork. Corporations, on the other hand, are more formal, and they're built for businesses that eventually want to get outside investors. Let's drill down on that big advantage for LLCs, pass-through taxation. What does that mean? Well, it means the business itself doesn't pay any income tax. Instead, all the profits, or even the losses, are passed through directly to the owners. Then you just report that income on your personal tax returns. It's simple, and it completely avoids the double taxation problem you can run into with corporations. But corporations have a pretty cool tax strategy of their own, something called income splitting. This is how they can cleverly manage that double taxation thing we just mentioned. So check out this example with Heirlooms Inc. The company makes a profit. First, it pays the owners, Jeff and Sally, a reasonable salary. That gets taxed at their regular personal rate. But, and this is the key part, any profit that's left over can be kept inside the business for growth, and that money is taxed at the separate and often lower corporate tax rate. For a business that wants to reinvest in itself, this can be a really powerful tool. And that whole idea of growth and expansion brings us to the next critical point. Choosing your legal structure isn't just about protecting yourself today. It's about setting your business up for where you want it to go tomorrow. Because let's face it, at some point, your brilliant idea might get so big that you need serious capital to take it to the next level. So what happens when you need to bring in money from, say, venture capitalists or other big investment groups? This right here is where the corporation truly shines. I mean, the entire corporate structure is basically designed for raising money. You can issue different classes of stock for different kinds of investors. You can offer stock options to attract the best employees. And as the source points out, Venture capitalists pretty much only invest in corporations because it's a formal, scalable structure they know and trust. Let's make this real with a quick story from the source material. Meet Layla. She runs this amazing little lunch spot called the Tide Pool, and it has become a huge local hit. People love it, and it's getting so popular, it's starting to get noticed by some bigger players. So, an investment group approaches her. They see the potential to turn the Tide Pool into a massive national franchise. But there's a catch. They can't just dump a bunch of money into Layla's little sole proprietorship. They need a formal, scalable structure that can handle their capital and grow across the country. The solution? They formed Tide Pool Franchising, Inc. Creating a corporation allowed them to build a board of directors, to define clear roles for everyone, and, most importantly, to sell shares to raise the millions of dollars they needed for huge national rollout. The corporation was the vehicle that let them turn Layla's local gem into a national brand. Now, that liability shield is powerful, but it's not indestructible. You have to take care of it. There are specific things you can do that can actually cause that shield to crack, leaving your personal assets totally exposed all over again. So what are the things that can poke a hole in that shield? Well, if you personally guarantee a business loan, you're on the hook. If you don't pay your payroll taxes, yeah, the IRS can come after you personally. A really big one is mixing funds, using the business bank account for your personal groceries. And finally, just ignoring the rules, like holding board meetings and keeping records. Lawyers have a term for this: piercing the corporate veil. And trust me, it's a nightmare you want to avoid. So the big takeaway here is that following the rules isn't optional. Things like holding an annual meeting, keeping good records, and really acting like the business is a separate entity from you, that's what keeps that protective wall strong. Maintaining these formalities is what actually keeps your personal stuff safe. So as we've seen, this choice is so much more than just filling out a form and mailing it in. It's not a one-and-done task you can just check off your to-do list. It is a fundamental strategic decision. It shapes how you're taxed, your ability to grow, your personal risk. It defines the entire path your business is going to take from day one into the future. So I'll leave you with one final question to think about. Whether you're just sketching that idea on a napkin or you've been in business for years, take a hard look at your company. Is its legal structure built just for what you are right now, or is it ready to carry you to where you're dreaming of being tomorrow?